Okay guys, rain, sleet, or snow, I am back with another crypto video. This post here, it's a post related to Meta. I'm not a big fan of Zuckerberg or really anything that he's a part of, but I still want to get into this. Zuckerberg's metaverse division loses $13.72 billion in 2022. Despite the numbers, Meta's leadership insists that the metaverse is still a top priority. Meta shares rose over 18% in the hours after trading Wednesday following the rosier than expected quarterly earnings report. But rising tides across Meta still couldn't lift the tech giant's embattled metaverse division. The company's metaverse-focused Reality Labs lost a whopping $4.28 billion in 2022's final fiscal quarter. Meta announced marking a new low for the struggling department that has been repeatedly positioned as the company's futures. Wednesday's announcement brought the metaverse division total 2022 losses to a staggering $13.72 billion. The division pulled in only $727 million in revenue in the final months of 2022, down 17% from revenue posted in the same period last year. Reality Labs designs hardware and software for virtual and augmented reality experiences, including the Quest for virtual reality headset and the Horizon Worlds metaverse project. Despite such abysmal figures, Meta's leadership was in relatively high spirits on its quarterly earnings call on Wednesday, as the company beat overall forecasts for revenue, daily active users, monthly active users, and average revenue per user. Perhaps most notably, the company pulled in $32.1 billion in revenue across all departments and apps, beating revenue forecasts of $31.53 billion. Meta CEO Mark Zuckerberg framed the upcoming fiscal year on Wednesday's earnings call as a year of efficiency, one kickstarted by the founder's decision to pink slip 11,000 employees in November. Zuckerberg insisted that Meta would remain scrappy beyond those layoffs in any way possible. We're going to be more proactive about cutting projects that aren't performing, he said as an example. So yeah, that was a quick excerpt from the article. I'm not surprised that division is like so gun ho about trying to make their metaverse aspirations, work out, because at the end of the day, a lot of people know that the metaverse is the future. Like, whether people, I know it sounds crazy to say now, like I don't want to get too deep into any of that metaverse stuff, especially as far as like how far I think it could go. I think many of us, when we think of how far the metaverse can go, of course, we think of something similar to the movie Ready Player One. I really don't want to see it go that far, but I think going that far is inevitable, honestly. I really do. And that's why I think companies like this are making such a strong push to get as much of a stronghold as they possibly can. They're probably, if they lost money for the next 10 years straight in this department, they still wouldn't stop. Because again, whether people understand it or not, this is the future. We're already 1 foot in the metaverse. I look at the way we live. Like, we spend 90% of our day on the internet, on social media platforms, on using different apps, using technology as a whole. Like, we're already 1 foot in. Once they really make it seamless to not only log on to the metaverse, but also once it gets to the point where you could just seamlessly put on like a pair of glasses or some sensor stuff around your fingers and other places. Yeah, a lot of people, they're just gonna completely walk away from reality. But next story here reads: Coinbase NFT pauses creator drops, insists marketplace is not shutting down. Coinbase NFT says the move will allow its developers to focus on other features for its product. In case you forgot, Coinbase still has an NFT marketplace, and it's not doing very well. Coinbase NFT announced on Wednesday that it's pausing future NFT drops, but specified that it is not shuttering its marketplace completely. We are pausing creator drops on NFT marketplace to focus on other features and tools that creators have asked for, Coinbase NFT said on Twitter. We believe that ultimately these changes will bring increased focus and efficiency to Coinbase NFT's team ability to build an enduring product that best serves the community in the long term, a Coinbase spokesperson told Decrypt via email. Our mission for Coinbase NFT remains unchanged, and we remain optimistic about our future as we continue building. It's unclear exactly why Coinbase NFT has stopped launches with creators in order to launch other features. It could be possibly due to a shortage of staff, as Coinbase, like many other crypto firms, has continued to lay off employees over the past year. Just last month, Coinbase said it was laying off another 950 members of its staff. When asked why it was unable to do creator drops and build new features simultaneously, Coinbase told Decrypt that the Coinbase NFT team realigned its resources to focus on the highest impact areas for our users. So again, that's another quick excerpt from this article from Decrypt. I don't think that really sounds good. I'm not a big Coinbase fan either, obviously, due to experiences I've had using the platform. But at the same time, Coinbase is one of the major players in the industry. I don't think the NFT marketplace they have is gonna last. They pretty much are saying that they're gonna suspend the NFT marketplace indefinitely. I don't really see a mention in this article of how long they're gonna pause everything. And then they're saying that they're gonna realign. They're saying they're gonna realign their resources and I'm like, to me that sounds like you're shutting it down, but you don't want to admit it yet, and you're taking any money you have and any workers, and you're gonna shift the money and the workers to focus on something that could be more profitable. But I don't know. Let me know what your thoughts are about that. Next and last story here is from Blockworks. It reads, Fed opts for lower rate increase. Crypto equity shimmy. The central bank raised interest rates by 25 basis points. That's not surprising, but all eyes are on the subtext. In a widely anticipated move, the Federal Reserve moved to bump interest rates by 1/4 percentage point Wednesday, marking the start of what markets hope will be a prolonged period of smaller hikes. The U.S. Central Bank cited Russia's ongoing war with Ukraine, continued heightened inflation, and need to reach maximum employment as reasons for the slower paced hike. The move marks the Fed's 8th consecutive rate increase, a strategy it hopes to curb the highest inflation the country has seen in more than 4 decades. But analysts remain worried a soft landing may be a tall order. The committee anticipates that ongoing increase in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Federal Open Market Committee members wrote in a statement at the end of their 2-day policy meeting on Wednesday. Bitcoin and Ether fell slightly on the news, declining 0.2% and 0.3% respectively. The S&P 500 and Nasdaq composite indexes also faltered, losing about 0.7% and 0.5% respectively, immediately after the Fed released its decision. Even with some relatively promising economic data, the major market moves are far from behind us. Craig Erlam, senior market analyst at Oanda, said, noting that Powell's 2:30 remarks will give markets a better idea of whether peak hawkishness has really been achieved. There is growing evidence that rate hikes have worked in cooling the economy, inflation, and the labor market, But the question is whether the Fed believes it has done so enough, particularly on the core measure whether inflation could prove more stubborn, Earlom added. At the December meeting, committee members stated that they believe that interest rates will ultimately hit between 5% and 5.25% at a median level. These estimates are scheduled to be recalculated in March. When asked his expectations for what the final rate level may be, Powell said that there's still uncertainty, but markets should be prepared for a higher level. So again, I'm gonna wrap the video up here. Let me know what your thoughts are in the comment section below. Like, where do you believe that how high do you believe that interest rates will rise? I've seen some people say it's gonna go up as high as maybe a couple hundred basis points before the year's over. Again, it's yet to be seen if it's gonna go that far. Let me know what your thoughts are in the comment section below.